Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a great Wednesday. If this is your first time seeing one of my videos, welcome to my channel where I'll try to demystify all things mortgage related. If you find this content helpful, like and subscribe. So today I wanted to talk about the major buckets of home loans and give a few examples of them and why you might do one or the other. To start out with, I'm going to say if you have no background on mortgages, I would first check out my basics of home financing video and use this as kind of a follow-up to that. But assuming you know the basics and what goes into it, the typical mortgage that 90% of people looking to buy their first home, buy a primary residence, are going to go with are your conforming loans. And by conforming loans, I mean a conventional mortgage or a government loan, which would be FHA, VA, or USDA. Now, these are very much your standard inside the box type of mortgages. So they will require at least decent credit, and they are very particular. They have very strict guidelines on income. The benefits are that they typically will have the lowest possible interest rate on the market, and they require a much lower down payment than the other options I'll talk about. However, sometimes you might not qualify for a conforming loan, but you have maybe great credit and a lot of assets, but the income and the strictness on the income doesn't work for you. You might want to look at a non-QM loan. So if you're looking to buy a primary residence, the two main non-QM loans that I'll talk about are an asset-based program and a bank statement program. So, and I may make a video on each one of these to go more in depth, but just on a basic level, asset-based programs are just based on assets. You don't need a job, you don't need a verifiable source of income if you have enough assets in like the stock market, for example. A bank statement loan program is going to be applicable for a self-employed borrower usually. If you, for example, write off a lot on your taxes and show a loss or a small net profit, you might be able to qualify for more on a bank statement loan program. And if you're not looking to buy a primary residence, you're looking to buy a rental property, but you don't meet conventional guidelines for an investment property, a DSCR loan may be a good option. This is a program that will qualify your income based on the future rental income of the property compared to the mortgage rather than your income, having a job or another source of income. So the drawback to non-QM programs versus conforming is that they will have a higher down payment for sure and higher interest rates for sure compared to conforming loans. The last bucket I'll talk about is hard money loans. Now, these are strictly investment loans. You're never using a hard money loan to buy a primary residence, or at least you shouldn't. And the reason for that is they have by far the highest interest rates. Typically, down payment is about comparable to non-QM loans, sometimes slightly lower, but the interest rates are very high. And typically, hard money is used for fix and flip projects. So the benefit to hard money is that they will finance the purchase of the property and the repairs as well. And they are by far, the other benefit is they are by far the loosest on the typical three parts of qualifying for a mortgage. Credit, you usually will need a decent credit score, but it's not typically it doesn't have to be that high, but they're not going to verify your income. Your debt to income doesn't matter at all as long as you have enough assets for the down payment. And the most important thing for hard money is that the property that you're buying meets the loan requirements. If you're buying a property based on the purchase price and the rehab cost, if that percentage is typically 70% or 75% of what the property will be worth after it's all fixed up. That's the type of loan a hard money lender will want to do. And again, much more focused on the property than your, as a buyer, qualifications compared to these other programs. I'll very briefly talk about one other kind of bucket of home loans, and that is private money. Now, I'll start by saying if you are seeing someone advertising private money, I would consider that hard money. They're probably going to be offering similar or the same terms as a hard money lender. That's not what I'm talking about when I refer to private money. This is more like your grandfather, grandma, uncle who has $1 million and wants to do something with it and gives you the money for a project at a way below market interest rate. Reason I don't want to bring that up too much is that is obviously not accessible to everyone, whereas these three buckets that I talked about are accessible to everyone as long as you meet the loan requirements. But that is something that gets talked about, and for serious investors, especially flippers, that is often the strategy they use to scale their business. But again, not accessible to everyone. So thanks for tuning in. If you have any questions, as always, shoot me a comment below, or you can call or text me on my cell phone. But I appreciate you checking this one out, and I'll see you next time.